Okay, everybody. Well, welcome to this session here, where myself and the guests here up on stage will talk to you about the actual partnership that will occur as Canada transforms its payment system with the initiative of Payments Canada. So the key throughout this is going to be the term partnership. And the partnership that needs to occur at every point in order to ensure that this is going to be a successful initiative. So you'll see here that from myself, my background is as a global lead with SAS, vendor for fraud detection capabilities. And so I go around the world. I have a team of subject matter experts, and we speak to financial institutions and other entities who are looking to help to engage in payments. And so I gain an element of knowledge around payments generally, but then also into the fraud detection of how to prevent the risk which associate as they move to these new initiatives. There's still a lot of activity in the industry around some of the older payment types that we know and love, and so we'll touch upon those. But there's certainly a massive growth in the new payment initiatives. So I will not profess to be an expert on Canada, and that's why I am supported here on stage by our panelists. So I will ask them to introduce themselves. I'll start with John.
Yeah, good afternoon, everyone. My name is John Cowan. I'm the Senior Vice President of Enterprise Payments at CIBC. So it sounds like a really big title, but in real terms, I need to pay money, receive money, transfer money, and report really well for our clients on money. And the topic today is important because as we do all of those things, we have to deal with financial crimes, be it cyber, be it fraud, be it authentication, and all the other components that go with that to be compliant. And so my role is to try and make the payments group and all of our partners work closely together with legal and others to get the outcomes. So that's what my role is in Canada.
Thank you. Diana?
Perfect. Hi, everybody. Diana Halder. I'm Capco Canada's payments practice lead. I've been in payments all of my professional career, and I've seen the evolution of this domain from being something that wasn't as sexy to being something that is incredibly important right now in Canada, and I'm happy to be a part of that scene. So 12 years plus of payments experience from wholesale to retail. Done a lot of SI and strategy engagements. I'm very eager to bring that expertise to the forefront.
Thank you. Joanna?
John just gave you a look like, what? Payments has always been sexy. My name is Joanna Lewis. I'm a partner at Capco, and I lead our finance risk compliance and financial crimes and data and AI practices. And I think that I have a very interesting combination of experience, very data-driven, and it's very relevant, I think, with a lot of the issues that are coming with payments modernization and how much craftier my friends, the fraudsters, are getting.
Thank you. And Jas?
Jas Anand. I'm with Deloitte, and I help manage the financial crime risk for the financial services industry. In short, I help clients, manage risks associated to financial crimes, and with a big focus on payments.
Thank you. So as you can see, a broad scope of coverage from myself as well as our panelists, and I think that really shows of kind of the amount of effort and insights which needs to go into making this work. And I'm sure you're gaining that if you haven't already had it from the other presentations and conversations at this conference. So this slide is just really to level set to some degree. A kind of apology at first is that, of course, North America is grouped and in many of the metrics. And so, we know that Canada has a tight trade relationship with the US, but we also know you're very distinct. From history, the innovation and the move to EMV from a cards perspective was certainly a massive distinction in payments that we saw. So we have tried to tease out some of the specifics from that perspective, and also from a terminology perspective. And I'll probably fall foul of this as well, is that just the consistent use of terminology within the industry is sometimes difficult. So we have things like digital, we have online, we have m-commerce, which are sometimes used interchangeably, and to many people will mean the same. But for those of you who are living this, we know that there can be different aspects to that. And that also then falls into things where there is confusion in some of the facts and figures we see, where online or digital can also mean e-commerce transactions with a card. So sometimes some of the fraud metrics are going to see spikes in this area, which may not even be there if we were to actually be distinct and clear on what we were presenting from a metrics perspective. So this slide is really just here to remind us of the competition which is already in the industry. So we can see here that there's still a high card use within North America, and certainly Canada is still utilizing cards a great deal. So this is, the banks have been striving to some degree for changes within this industry, some of it driven by interchange costs, but some of it just to free up that competition. And that's what I see from around the globe, is that some of this has been driven from a competitive perspective, and these are the kind of fruits of that labour. There's also other benefits as well, but to the consumer, we've certainly seen that. And if we look to the US, then in Q4 2018, the Venmo capability there saw an 80% spike in activity from a transactional perspective. So that's, as you'll be aware, is a new entrant into the market over the last few years. And that transaction volume is really just showing the growth which can occur when we have a good product which is accepted in the industry. There's every expectation, of course, that the offering from Payments Canada and the bringing together and the partnership with financial institutions and non-financial institutions will, of course, make this a success. But we need to ensure that the industry gets every portion of this correct, and that's what we'll dig into as we go through this presentation. And certainly the security around this is going to be key. So the chart also represents, what it doesn't represent is the activity around cash. So in many areas of the globe, we're seeing the requirement to move away from cash. Demonetization in India, etc., is really trying to look to convert those cash into electronic payments. And a payment provider like Zelle in the US, which is targeted towards taking out some of that cash, saw increases of 72% in volumes in Q1 of this year. So again, a lot of activity around trying to take that cash out of the industry, and in fact, having those cashless societies is a benefit to both yourself as well as the government as they're trying to reduce other fraud and financial crimes like money laundering, etc. It's odd because I have done a lot of work in Denmark previously, and I see that Denmark has very similar concepts to Canada in that they have proprietary card networks themselves for in-country payments, but they've not been adverse to actually, looking to competition. So they have this openness from a payments environment, and there's certainly an appetite from the consumer to actually move to these digital payments. I was in Denmark, in Copenhagen, a few weeks ago, and I had an unfortunate situation passing a person on the street who was homeless, and they were asking for money, and I tapped my pockets and said, "I don't have any money," and he said, "It's okay, I take mobile pay." So it was quite refreshing that, even to those levels that, people are accepting the kind of cashless environment. But then on the flip side, we have Philadelphia, who just recently passed legislation that you cannot actually refuse to take cash in the state there, which again is kind of slowing down some of this change. But we have to acknowledge the unbanked and underbanked across the world as well. So from the next slide, we'll see where some of this activity has occurred before. And as you will all know, Canada is not alone. So there are a lot of insights out there across the globe. Yes, it may be changes here for yourself, but those insights, those learnings are available. And you really need to, of course, focus. Many of these may not be applicable to yourself just because of the nuances of Canada. But if you look to similar demographics, similar geographies, similar principles, then that's certainly going to provide good insights. So to John, I'd ask, have you been provided with any information about equivalent type payment systems, or have you gone out and sought information anywhere?
Yeah, so it's a great question. With 41 countries globally now in the faster payment proximity, we go to a lot of different conferences, including their CIBOS and others that we see, and we meet with a lot of our counterparts, be it on the SEPA program or on what's happening in MPP in Australia, and looking for specific trends around what's happened in those markets, learning from them. In the UK, 10 years ago, they went live in faster payments. We've learned a lot from, Barclays and a number of the banks over there who have been giving us specific information. And then we talk to the Australian banks who've just gone live recently with the faster payment rail, and we look at, what works, what doesn't. Canada, although it's behind at the moment, has a very strong view to move forward quickly with a lot of things all at once. And it comes back to how do we actually put that into a safe and sound way of delivering all of the requirements in a short period of time and making sure our consumers are also protected. And as we look at the Australian market, the UK market, you talk about the cashless societies in the Nordics and others, it's changing so rapidly that you can't do everything at once. So you've got to pick what's really important, make decisions on it, move it forward, make sure it's safe and sound, and then innovate on that. And that's what we're learning as we talk to the other jurisdictions.
Thank you for that. And I mean, are you looking to the US, knowing the trade that goes on there?
So 75%, absolutely. So 75% of the trade that our businesses do from Canada clearly go to the US. We're looking at the interoperability of the faster payment rails, especially up to certain value caps over into the clearinghouse and into Zelle. Our clients want more convenience to be able to move money between the jurisdictions. Again, each individual channel, even in each country, has almost built their own verticals in some cases. And very soon as they become more mature, as Payments Canada have said in their partnership with us, interoperability is one of the goals of modernisation in Canada. And interoperability, not just between participants in the domestic market, but into the US, is going to be critical with the data for our clients. If you just move the money cross-border, we can do that today. But our clients are demanding in all of our discussions, they need richer data. They need information to actually allow the ERP systems to reconcile things. They need more data around, what the payment is and doing requests to pay and things like that to go cross-border. The FX will still be there, but again, they need it to be seamless and done in real time.
Agreed. And you mentioned NPP. I'm sure you're getting more insights through your direct relationships from the banks there, but unfortunately, NPP have not published any fraud losses yet. So we're expecting those probably this quarter, considering they will have been in production with that payment type since, I think, February 2018. So hopefully they should start to come through, and hopefully it's a trickle and it gives you some confidence of the insights you're getting there. So thank you. So Diana, have you brought in payment specialists, considering what's going on in the globe, in order to kind of support your clients?
Oh, absolutely. Whether you're a bank or consultancy, it's important for us to tap the folks that have hands-on experience in other jurisdictions and bring them to bear in Canada. And this holds not only for the resources, but also for what the other jurisdictions are doing really well, and see if that makes sense for the Canadian economy. It's not a copy and paste exercise. It's an identification of what works across the different jurisdictions. Does it make sense in the Canadian economy, and bring that in? Some folks really like to think we're very much like the Americans, but we're not. When it comes to banking, we're much more risk averse. But one of the countries that I really focused on was Sweden, because I really enjoyed what they were doing with RTR, and more importantly on ISO. When we talk about it a little later, I'll double click into that.
Perfect. Thank you very much. So, of course, Canada is in a unique position. We know that not everything will be cookie cutter. And so it's going to be an evolution for yourselves. But I really think that this partnership, by looking outside of yourself, your region, etc., is going to be key to ensuring this is a success. And NPP, as John mentioned, was a great collaboration. It was a collaboration between the regulators, the banks, but unfortunately there are only 11 banks in Australia, so it may have been a slightly easier task in order to achieve that. And less complexity there. So the real kind of drivers in this is that there's going to be a partnership internally within Canada in order to make sure that Payments Canada and yourselves and other parties are really going to make this a success. So there are a lot of complementary areas where we need to look to in order to ensure that success. Technology and infrastructure is certainly one of those, and the developments are allowing integration with digital capabilities is really key and is what's going to facilitate much of the activity and the benefits from this initiative. We'll also talk about ISO 20022, which Diana just touched upon, and the flexibility that brings within the industry to contain the data, as John mentioned, in order to allow some of these efficiencies, certainly internally, but also cross-border. So, Diana, how do you see this business and commercial banking touch point occurring?
Specifically for ISO, well, let's talk about that because that's actually quite a topic that's near and dear to my heart. Again, payments geeks out there, you'll appreciate what I mean by this. So I think there's a ton of opportunity for the commercial space in leveraging ISO. John talked about it earlier when he said the clients are demanding richer data. They're demanding interoperability, not just interoperability within their ERP systems, the systems within the company itself, but also interoperability between banks within a jurisdiction, and interoperability between banks between multiple jurisdictions. And so what ISO does, if implemented correctly, is it has already universally accepted structured fields that we can absolutely leverage and deploy. We don't need to recreate the wheel. We can implement what already exists from other jurisdictions. There's an initiative that's happening with ISO that actually looks at developing financial service APIs, standardizing financial service APIs, and it looks to embed ISO 20022 as part of its payload. So there's plenty of opportunity from interoperability within systems, interoperability between jurisdictions, and really if you're looking at what's happening with the different payment types, even in Canada, you see there's a convergence of payments to use this one standard, which means there's this opportunity for us to simplify our payments operations.
Thank you. And I mean, you are correct, of course, that the ability to share data is going to be key. And Payments Canada will, of course, simplify some of that, as you mentioned. So, John, how do you see this simplification of the infrastructure really helping you out from a fraud perspective?
You know, I think from a low-cost routing and trying to make sure the payments go through in a seamless process. You know, the future state I see in both the banking industry and in payment providers is we don't have operations, we don't have paper. You've got to get straight through processing. You have to reduce, you know, the friction in the system as much as you possibly can, and the exception handling. And the infrastructure itself and the changes to what we do from a technology perspective in building low-cost routing, multiple routing, the ability to be channel agnostic, so you build, you know, payment engines that do certain things, so you can pick and play best of breed. The banks and others will never always have all of the technology they need themselves. We'll have to make decisions around buy, build, and partner. And the ability to actually use APIs and to actually put in new functionality to different individual payment patterns or things that you want to do is going to be critical for us to not only survive but thrive and be really competitive in the future environment. And you talk about the ISO data, how does the technology simplify that data to the clients, our ability to reconcile ourselves, to be able to get the straight through processing, to use AI to actually auto-correct when a trade pattern comes in incorrectly and we can make different components. I would also mention, as I finish on that, we talk about ISO 20022 as the critical part. In both the UK and in Australia, the most used sign is not ISO 20022 data, it's actually emojis between P2P. So they're actually putting smiley faces and sending money. So don't forget the unstructured data is just as important as the structured data as we move things through the system. But the actual technology and infrastructure that we need, it's different. It has to be 7/24, it has to be frictionless. We can't have downtime. Some of the paper flows we have today, like checks and things like that in Canada and cash, I think it's going to be difficult to eliminate cash in Canada. Because as soon as we eliminated cash, we'll just use US dollars, so because they won't. So cash won't go away, similar to some of the jurisdictions in the euro. Mm-hmm. But without technology and operations, and actually people that understand the client experience, technology, operations, and all of the components working in payment groups, we can't, it's a new type of skill going back that really doesn't exist very much in Canada yet. So it's a developing skill that we all need to actually get the straight-through processing that we need.
Agreed. And down in Australia with MPP, it's actually bred a lot of interaction between the banks, separate to the actual processing and the deployment of MPP, in terms of, you know, they've got a lot of exchanges now, and there's actually one which is the Australian Financial Crimes Exchange, where they can share bad information and fraud information between themselves, which is kind of a side infrastructure which has been set up in order to support that. So, Jas, a question to you. From a digital payments perspective, one aspect is, of course, that there'll be a lot of transformation occurring. So disruption is going to be key. So how do you see that the competition from other payments facilitators will occur?
So I really like to think about these things sometimes with the perspective of the criminal. So, you know, I know we're all thinking about this from the customer and the great new features, but if I was a criminal, I would be thinking, this is great. We know Canada is doing a large-scale change. All of the banks are moving to a modern code base and infrastructure. So all my cyber criminal friends, congratulations. We now have a code base we can attack. I mean, attacking the current code base in Canada, you'd need to be an 80-year-old hacker. And I don't know how many of those there are. So those guys are out of a job. But everybody else, you know, is like, hey, this is a brand new modern infrastructure. All the banks have to big bang make this change. Banks are not good at doing this. We have experience in Australia robbing them. We have experience in the UK 10 years ago robbing from them. You know, let's take advantage of this. So I think we're going to see a wholesale import of criminals into Canada, you know, when we do launch the capabilities. To me, the fastest adopters of technology are also the criminals. So as soon as you have, look at Apple Pay in the US. Criminals adopted it faster than consumers. Look at Zelle payments in the west coast of the US. Almost double the adoption rate of criminals. When the UK launched faster payments, on the first day of launch, there were more criminal transactions than legit payments. So to me, the fastest adopters are the criminals. Canada's done a great job advertising that we're going to payments modernization. We're upgrading everything. We're going to real-time payments, digital channels, you know. And so as a criminal, I think what you're going to see is broad-scale export of criminal capabilities into Canada during launch. I think you're going to see cyber capabilities to affect the payment processing system just for disruption, just to say you could do it. From a fraud perspective, nothing is more valuable than large value real-time payments. So all of the billion-dollar events that you read about, from the SWIFT compromise Central Bank of Bangladesh to the Carbon Act fraud, they've centered around large value real-time payments because it takes away the ability for the financial institution to react to that fraud. It essentially means you have to do everything right away. You have to do everything in real time. You have to make decisions quickly. You know, and if I compare the new fintech entrants with traditional banks, fintechs have always worked in a real-time world. You know, they don't really view this payment and settlement and, you know, this kind of ecosystem that we have, which takes days for transactions to occur. And so for them, I think it'll be easier. Unfortunately, I think they're just not as good at security and risk management as the financial services firms. So unfortunately, I feel like, you know, new entrants into the marketplace are just going to increase the importation of these bad criminals. And then from a money laundering perspective, Canada has a stellar reputation. You know, when money comes through Canada, it's deemed better than if it comes through many other countries in the world. So if I was laundering money as a criminal, I would be trying to open as many accounts in Canada as possible, because routing funds through Canada automatically reducing the clearing time going to high-risk countries. So whether it's cyber, fraud, or AML, I think we're going to see a whole-scale import of criminal activity into Canada, and that's going to mean that we're going to have to be even more prepared than usual. The good news at the end of this is, if we are successful at building the right capabilities at launch, we'll see a whole-scale deterrent, because other countries are going to launch this capability, and if they're not as good as Canada, the criminals will go there.
Thank you. And although, as Jas mentioned, the UK had moved to a faster payments initiative around 10, 11 years ago now, we have actually just gone through a new regulation called PSD2, the Payment Services Directive, the second one, and that is actually opening up bank accounts to third-party payment providers, fintechs, in order to directly come in and request funds from the bank account through these APIs. So I think that security aspect is something that Europe will also see as well as Canada. So, of course, the digitization and the aspects around the competition there is really kind of global. There's a lot of the virtual banks in Hong Kong, etc., who are really kind of having this disruption within the industry. So, Joanna, do you see that there's complexity in deploying some of these initiatives within the current infrastructure in Canada?
Sure. Well, first I'd want to start with saying that open banking is an amazing opportunity for the FIs in Canada. You know, on first glance, it may seem like someone else is trying to eat your lunch. But opening up that value chain gives you opportunity for new and different types of profitability models with your customers. But at the same time, it requires a lot of things that the banks have been struggling with. You know, so for starters, you know, it's gonna come with, because you're going to be sharing data and customer data with third parties, it's going to come with potentially new security requirements. And so the banks are still trying to stabilize their existing security requirements and resiliency around that. And there's a lack of, I would say, you know, compounding that, a lack of direction here in Canada as to what some of the standards around open banking are going to look like. Now, I understand there was a Canada 2020 task force recently that was, you know, sort of a closed camera session. Some of the feedback's come out of that, but there's, you know, a lot of angst around the lack of visibility into the expectations and standards around that. But it will be important for the banks to follow a very common standard, not unlike, you know, ISO 20022 to enable that, which will mean more changes. And I think the last bit that Jas pointed out was third-party risk, right? So you're now having to allow third parties that you may not know a lot about into your value chain. And again, there's a lack of clarity on what's the accountability of the FI vis-a-vis that customer's data and experience with that third party.
Excellent. And, you know, risk is certainly the next aspect that we're looking to cover in this session. So a good segue in there from Jas and Joanna. And it's really then coming down to that internal partnership in order to protect yourself. So Payments Canada, the industry together will do what they can in terms of trying to deem some of these security opportunities. But it's then down to yourselves internally to look to how you can mitigate these risks. So as you're all aware, the pillars of fraud are really looking to cover off each of these elements in terms of making sure that there are policies in place, there is oversight, training, and also documentation for this. Assessment of the internal and external risks, of course, is key. There's a lot of activity around potential risk from an internal fraud perspective, which have been seen historically with some introduction of new payment types and the provisioning around that. The other one is then prevention, trying to do what you can in order to prevent as much fraud as possible and as much risk within your institution. And then, of course, detecting it should that happen. So you need to have the correct monitoring in place, the correct audits, and even analytical processes in order to do that. And then there's, of course, the response to that and how you can circumvent that in the future once you have identified the gaps, and also how you can report on that, etc. So, Jas, from this perspective, do you see clients investing in looking to their risk management function as part of this?
Yeah, I think traditionally people have looked at risk management as the people that say no. You know, can I have higher limits? No. Can I get real-time payments? No. I really see risk management now as you know, an enabler of a strategic differentiation for an organization. So as we all move to real-time payments, if an organization is very comfortable with those elements of risk and has a good program in place, they may be able to offer faster payments with higher values, quicker than others will. And so I think, traditionally fraud has always been thought of as non-competitive. I think in this environment with everyone getting to the same capabilities really fast and fighting for the customer's wallet and pocketbook through, efficiency and simplicity, having good control framework actually enables the business to take those risks with greater confidence. So that's how I really see risk changing, the dynamic, is being part of the equation or the value proposition to the frontline businesses. Having that strong risk foundation allows you to increase limits faster, offer products and services faster, clear and settle payments faster, but the reverse is also true. If you look at examples where extreme losses have occurred, most of the organizations had to do the reverse, take away limits. When Zelle was first launched, and that organization that was attacked had to reduce the limits by almost threefold. Add delays to payments. We're going to hold your payments for a day or two because our fraud systems or our AML systems are not up to par. So, over the next few years, I think risk mitigation may be one of the many different levers, but definitely an influence on the ability for financial institutions in Canada to compete effectively. And so, getting ahead of the curve and being ready for day one launch gives you a significant advantage, and you're already seeing the larger organizations in Canada, almost competing to get there first.
Thank you. And I was speaking with Diana earlier, and she actually indicated that these pillars of risk coverage are true when she's doing work from a resilience perspective. So, John, just to put you on the spot, is your business going through this this kind of assessment of your risk areas?
So I'd go a step further and say, if you're assessing it now, you're probably too late, given where the market is moving right now. So we've been on a journey for a period of time, looking at all facets of our financial crimes suite to look at what we should do. We want to be, as you heard our CEO in the keynote speech earlier talk about defense strategy. We do have a defense strategy as well as offense of what we will do in this space. But it's taken a long time to educate Canada around the traditional risk scoring models and things like that we've all grown up with aren't what the future's about. AI, behavioral transaction monitoring, authentication, looking at fraud more at systemic levels in the center to look at different pieces, block lists, using other data that we don't use today, like IP addresses of all of the devices, the ad IDs that we have. It's going to be key that we have a much better view of each client. And our view is slightly different. We look at all of our fraud and our risk mitigation strategy, but we want to get it to an individual client level and start, when you talk about we're going to increase this limit, well, why are we increasing that limit? Why is it just one limit for one person? We'd like to get to a point where it's really driven by the consumer of what they need to do in the circumstances with the data that we have. And based on what happens, we're able to mitigate the risks that we see from a financial institution, be it a domestic payment or cross-border. And I think that's where the competition in fraud, again, will happen, because if it's just about getting to a $10,000 limit for 750,000 clients and this is what will happen, that's not how a fintech feels. They go, this client is an individual and they want a limit like this to do certain things. So we've been at this journey for a period of time. Internally, it's taken some time to educate everyone, but the power behind it now, and you hear it from our executives and everyone else, this is one of the most critical part. If you look at, you asked the question about other jurisdictions before, we've followed what happened in the other jurisdiction. The lowest common denominator gets hit the most, and they leave the person who is in a better position. And we want to be maybe near the front and not being attacked, and maybe it's a competitive advantage, especially with data and security in the future. And it will identify specific things that we can do for our clients individually that they want us to do for them as well.
Thank you. So both of those aspects kind of cover off the next area that we want to talk about, which is having that partnership, that joint approach to actually reviewing the processes which you have. So it's really going to be a stepwise approach in terms of iterating through this. Now, at a high level, you may look at this from your institution's perspective and see that you're doing each of these. I think aspects of this are that, there is a need to be better prepared when you actually dig into that detail. So one of the things that we will talk about is going to be data, and making sure that the data sourcing, the changes which are occurring in the industry, are well known and well understood by your institution, and how you can use that from a fraud perspective. Without that, then many of these building blocks actually kind of are less beneficial, certainly, probably to the best aspect. But what we're looking to is actually how this is going to be changed. So, Joanna, have you seen growth in banks looking to increase their data scientists and how they're looking at data?
Absolutely. So I have to hand it to my clients in fraud that they've been actually trying to tackle machine learning for some time. And, you know, to some extent earlier more around insights, and now they're looking to operationalize it more. So absolutely, they're hiring more and more data scientists. I mean, talking to one client just in the financial crimes and compliance space, they were trying to ramp up like 100 data scientists, and data engineers. So those are two complementary skill sets. And so there's a big focus on that, to the point where, you know, we at Capco, we keep a very targeted set of data scientists, because a lot of our clients want to have their own data scientists and grow and develop that skill set.
Thank you. And I think what it's interesting to see is that, you know, these data scientists are either new within fraud, or they're moving from other areas of the business where data science, the production of models such as in credit risk, marketing risk, have been around for a while, but they're actually moving into fraud from a necessity perspective. And, you know, what's important to understand with the new initiatives in Canada and globally is that there's going to be an increase in the volume of transactions coming through this new payment method. And you have to be prepared to how you're going to protect yourself from a fraud perspective on this. Now, historically, when there was a settlement period of a few days, sometimes hours, then you were able to throw extra resources at this. And you didn't need to have that bolstering of your systems and your processes up front. You were actually able to do it on the back end, which is not really going to work anymore. And so that manual check-in, that ability to take some time to investigate, to assess the risk, to hold the bulk of payments is not what the clients are expecting, and that straight-through processing, as John mentioned, is not going to help drive this into the industry. And so what we're seeing then is that there's actually a move into other areas of what the fraud solution need to do now. So the principles of kind of what needs to happen in terms of fraud prevention and detection are kind of represented here. Maybe the writing's a little small, but it's talking about utilizing extra data such as that from social media. More efficient authentication, as John touched upon earlier. A broader view of customer activity and the profiling and behaviours which go on in order to be able to treat that customer as they are an individual rather than through a siloed initiative. And then also the ability to have real-time monitoring. And so it's really this ability to have real-time monitoring and bring some of those historically manual investigative processes up to the front of that actual payment processing to make those decisions at the right time. And to give you some element of what the right time is, you know, in Europe we have the single European payments area, and the processing of those transactions needs to be done in 300 milliseconds. So that is your fraud detection, which needs to occur in that time. For MPP, an irrevocable settlement period of 15 seconds. So once that payment has gone through, if it is fraud, then you have lost that money and there's a remediation necessary in order to claw those funds back. So these are the types of scales that we are looking to, and the potential risk if we don't do the right thing at the right time. And in order to do that correct aspect from a fraud prevention and detection perspective, you need to be able to see all of those transactions. You need to be able to see all of those payments in order to make that decision across those payments. Otherwise, you're going to potentially just hit the high value ones, or you're going to miss out the commercial payments, etc. And so this is where you really need a solution which is going to be able to stand up to those volumes in the future. But it's also not just the aspect of preventing fraud at the payment stage anymore. So from a fraud manager perspective, fraud managers are now seen as being kind of key to ensuring that the customer journey is not impacted. So, John, from this list that you see, do you feel that you're ready for the requirements of what you need in order to protect yourself and your bank?
So I'd use the UK as a great model. They all thought they were ready when they went live with faster payments. I think about the criminals, and what they're doing, and they're more resourced than a lot of the banks and a lot of the people here. I think we can only be ready to what we know about and what we can prepare for, and we do our research and put the right type of items in place. I worry about things like the case management system at banks being overwhelmed. What do we do? So the black swan scenarios of what we need to do. So there's a lot of scenario planning, what we can do to not just change limits, but this comes back to the individual client where there's systemic risk happening. How do we not impact all of the client base by doing things in certain areas? And being the least targeted bank would be great for us. And that's really our strategy at the current time is, and it's okay, there's 5 big banks, the 4 others are good targets. And if we're in a position, we're investing heavily, and we are, and we're working really hard with a lot of different pieces to get our position, both from the authentication, the financial crimes, AML. Again, our CEO talked about defense. And we think as we go into this, we can have the best shiny object as a product, but if we don't have a great defense, we won't win. And we'd like to fight on the battle of we're safe and sound and secure for our clients. 152-year-old bank, we want to continue to have that reputation, because without that, we're just like the fintechs, right? And we've got to differentiate ourselves in a different way around security and compliance and doing things in a different way. So I think if I look at this list, are we doing everything? Some of it. Do I think we can go further? We're trying. The issue in the whole industry in Canada is, the faster payment rail and, what Interact's doing and others goes live before a lot of new fraud engines will be in place. So then we're going to have to do specific market type analysis to decide what we'll do at what point to allow us to move forward. And so from our perspective, there'll be smaller steps, there'll be learning, changing limits, learning from those clients. What other data can we get? How do we use AI in our case management system to try and work through the false positives, which is on there, which is a huge friction point for all of the clients. And, in the future, when a client, for instance, has fraud or something on their card, but they're somewhere else, how do we keep them transacting? We need them to have the digital wallet so we can actually do different things for the clients and help them in the future. So it's all about how do we get straight through processing, and how do we take all of the friction out of the process for our clients to remain relevant? If we don't do that, I think it's very difficult, because we're like a lot of the new participants that, might have data losses and other things, but they continue to grow.
Certainly.
So just to, I completely agree with the items on the list, but just to simplify, from a financial institution perspective, more data comes with an obligation. When you get more data, you have to use it. So if I'm making commercial payments, for example, and I attach an invoice, if the payment amount doesn't match the invoice amount, if the payment's going to the wrong party, if the person on the invoice is a terrorist, you have to now check that invoice. If that invoice has an embedded URL, do you have to check that URL? If somebody facilitates a payment through your banking network and your channel, they click on a received payment, open the invoice, and get malware downloaded to their PC because they're on your website opening your payment, is that your obligation to verify? I know a lot of these things are not clear yet, waiting for some standards to come in, but I would say as a financial institution, more data is great from a customer perspective, from an efficiency perspective. From a risk perspective, it comes with an obligation. You cannot ignore the data. You have to use that data. And now, when we're trying to make decisions in milliseconds, can you use that data in milliseconds? And if not, what is your backup strategy? So I completely agree with the items on the list, but anytime you see a payment instruction with additional data, if you're not using that data, you're going to suffer additional risks, and you're exposing your organization to risks that you may not even be aware of. And so it becomes very important to have the time to parse and understand when people say, we're enriching the data and adding X megabytes of fields or information that can be transmitted, you have an obligation to read that, review it, and understand it from whether it's a money laundering obligation, a fraud, or a cyber obligation, and you can pick your channel. But I'd say ignoring that data is a big risk.
Thank you. And that segues well into the next slide, which is really the changes which will occur in that data. So what Jas mentioned is, there's going to be a lot richer data within the ISO 20022 message, which was mentioned. So even the payment is going to have more data. but where else are you going to have to look to in order to utilize data? And it's really the growth in digital here. So this graph shows you the spike in digital activity, and this means that there is going to be an influx of data into or available out there. You may not choose to use it, but if you choose to use it and accept it from the third parties, or you develop your own device fingerprint, session harvesting tools, etc., in order to bring this in, then you have the ability to use that. And that really needs to be considered as much as possible. But you shouldn't also let over-analysis and considerations around maximizing the use of this data to actually occur from day one. So Diana, thinking about other initiatives on this scale, how have you seen data being used?
So I'd actually like to talk about something Jas mentioned earlier and try and answer this question. So one of the things that I'm experiencing when working with the banks and fintechs, but primarily the banks, is this pursuit of 100% perfection. I need that perfect business case. I need that perfect risk strategy. I need that perfect data set in order for me to deploy something. I need to do reams of research, look at all the jurisdictions, and make sure that I am perfect. And one of the things that I work with my clients to achieve is being comfortable with imperfection. To be comfortable with imperfection means that, yes, you may launch a digital wallet, you may launch an online experience, you may consume some data, you may launch real-time payments, and that does open you up to failures, but it also opens you up to success. And it is how we position and how we kind of think about going to market quickly or going to market with an imperfect strategy or an imperfect product, and learning from that imperfection is what the fintechs do really well. And this is something that we can learn from as financial institutions.
Thank you. And at the end of the day, you do need to make a decision on this payment at the right time. And so being able to utilize and maximize the data you can at that right time, you can only get better as long as you have a level of detection and capability in place. And it's really coming down to making sure you're aware of what's out there, aware of what's in your business. There may be new sources internally which you can tap into, and pulling these in through a decision hub approach in order to make those right decisions. So something which John mentioned was the move, of course, and application of AI. So from my perspective, there are three main areas where we can maximize this from an AI perspective. There's going to be machine learning, and so machines and programs and systems can be programmed to calculate complex input features into these models and apply complex algorithms in order to identify fraud. Now, some of that will come from the insights for this particular event or transaction or payment, but some of it will come from the profiling which John mentioned, trying to treat this customer as a person, knowing the other activities which have occurred. The other aspect is on the other end, which is going to be looking to more kind of robotic process automation. So there is going to be an element of case management. There's going to be an element of investigation which needs to occur. But you can make the process in there a lot more streamlined. But you have to realize that it may be too late to offer it at that point. But you still will have to submit fraud reporting and things like that. And being able to streamline that from a robotic process automation perspective is going to be key. So what we've seen is that the data available in payments is going to change in this initiative. And as Jas mentioned, there's going to be a lot of unstructured data in there, and that's where natural language processing comes in order to be able to look to those elements and look for those key terms within that data. John mentioned the use of emojis within NPP, and so that's something you may not get too many insights from, but certainly from a commercial payments, there's going to be a lot of invoice information in order to help out with some of that straight-through processing which can occur. Okay, so the next slide is really going on to some of the risks, unfortunately, if we don't get these elements right. And so there can be kind of breakdowns in these partnerships at certain places. But there's going to be an element of fraud. Now, these are metrics from the UK. I think from my perspective, one thing which I like, not being in the industry in terms of the banks, is being able to see these insights and the fraud which is occurring, because it helps me out. I hope there's a lot more, at a minimum, sharing of insights internally within Canada in order to see the risks which have occurred in the future once you move to this initiative. But the UK is very good at publishing these, and so you can look to them. Hopefully Australia, as I mentioned, will be bringing out metrics in the future. But it's interesting to see here that, you know, from a risk perspective, that good news is that things have flattened off when we talk about some of the internet banking payments, which was probably the first initiative in terms of the faster payments, which the UK went to 10 years ago. But we are seeing an increase in losses. So although the cases are relatively static, the amount of loss per case is actually increasing there. And so there's a significant concern there, even from the payments which we've had for the last 10 years. And then there's the growth in mobile or digital, again, to give it that reference that we've been using throughout this presentation. And it's there where we can really see the spike, coming in 2015 when that growth really started in the UK and the move to those payment types. And we are seeing a spike in activity there. So, John, may I ask, how are you kind of forecasting for these losses, which undoubtedly will come to some level?
So I was going to say the other four banks should be doing their analysis first. But realistically, we're doing a lot of different modelings. The data you have in front of you is actually more scary than you think, because the banks in the UK didn't stand still. They were investing heavily in their fraud protection and what they were doing, and the losses haven't come down. In fact, in some cases, the size of the losses and what's happening in the market is actually continued to perpetuate as it goes forward. So it's about being the lowest risk target, looking at the modelling that we do, where are we going to allow different clients to project in different ways. Again, it comes down to how do you get to the individual clients with their behaviour or what they're doing, and does it look like it should be what they're doing at this time? And it can't be a blanket risk statement or a score anymore. And you've got to use the data that you have effectively to get to that score. Do we think we'll eliminate all the fraud? We're not that naive. Hopefully it goes to one of the other four big banks? Sure. And I keep saying that because we're working really hard on this, and we believe we have a really good strategy around what we're doing, both in payments, AML, and it's consistently together. There aren't different verticals working in opposition to each other on specific projects within our institution. Our financial crimes division, our AML, and our payments are really part of one group dealing with what we're doing, because they all link to each other. The payment themselves lead to the potential AML because, I trigger the payment or I receive the money, so I'm causing the AML, so I'm told. And on top of that, when I do a payment, that's where the fraud is initiated. There's account takeovers and all of that, and we've got to deal with all of those things, but we're trying to put ourselves into the position where the lowest target.
Thank you. And one aspect which I typically fall to is I always selfishly look to myself, and so I always think of the consumer and retail, but there's also an element which is the commercial side, and being able to, of course, payments is going to change for your commercial business. And so the next slide really just kind of shows you the distinguishing aspects of fraud from a retail or personal here versus non-personal perspective. And it's interesting to see that personal in 2017 had an average loss of around £2,800 per case, whereas business in the same period had 24,000, so nearly a tenfold increase in the actual loss there. So, Joanna, where are you seeing the different risks between business and corporate banking being seen?
Well, one thing that I found actually interesting about the last few slides that you shared is that it was focused somewhat on silos. So we saw some of the digital channels. Here we're seeing silos between lines of business, and that fraudsters love that. They don't care about how the banks organize themselves, right? And it's really, in my mind, I look more at the fraud vectors and, you know, and the statistics around those, because those cut across channels, they cut across even personal and commercial. So, you know, that's an important distinction to make, and very important in measuring and managing this. You know, of course, with commercial scenarios or threats, there's more actors, right? So you're going to have more opportunity for a bad actor within that value chain, right, or that transactional chain. And so, you know, there are certainly some frauds that are going to be more unique to the commercial side, like invoice fraud. But, you know, at the same time, you know, when we look at payments modernization and the real-time rail, you know, the main fraud vectors that you're going to look at are account takeover, you know, push pay fraud, and the invoice fraud. And, you know, again, emphasizing the fact that that cuts across actors that are more in the personal banking space and others that are in the commercial banking space. So I see them intertwined.
Yeah. I would certainly agree that what we see is that there's certainly a different process in order to create the payment from a commercial perspective. So of course it's easy for me to authenticate today with my thumbprint on my phone, but as I go into the commercial space, I may need multiple levels of authorization. I have different ways of authentication. And then I also have a segregation somewhat to the actual money that I'm transferring. It's not my own money, and not that people are being obtuse, but they are just kind of not thinking of things. So things like CFO fraud, business email compromise, etc., is a very complex fraud, and it's easy to be kind of tricked by that. But there's also that fact that they're not attached to that payment.
I think that's really good. I mean, that to me is one of the biggest differences is the liability. You know, on the personal side, very rarely is a consumer worried about being held responsible for, unless you're complicit in the act. On the commercial side, things like business email compromise and others, a lot of the times, you know, businesses are on the hook for these payments. You know, the CFO got duped. They hacked into their email address and sent a message to someone in their office and said, you know, wire out $1 million. I think financial institutions have to really think about their position on liability. You know, are you really looking to protect your consumers only when it's your fault? Or do you really want to protect the consumers even if it's their fault? And so on the commercial space, I think, you know, increasingly organizations are going to look to, you know, financial institutions that protect them even if they're at fault. Even if you downloaded the virus and even if you got a bad email, you know, what is the financial institution doing to still protect me? In the US, there's been a few institutions that have gone bankrupt, and now there's threats of a class action lawsuit against financial institutions. And that's the kind of, you know, financial, you know, implication if financial institutions need that to consider. But really, if you think about this from the protection of, you know, protecting Canadians from fraud, you know, whether you're liable or not, you know, you should have the, you know, the same skin in the game, because you're just, you know, from a criminal's perspective, they don't care. You know, they've still gotten away with the money. Yeah.
Thank you.
We're actually, just to add to that, we're actually seeing insurance companies offer insurance for data breaches. So there you see is another opportunity for financial institutions to support their corporate customers, maybe not banks, but still in that broad. The one thing I did want to call out is, even though there are multiple layers of authentication and there's a segregation in the commercial space, a lot of the fraud occurs from the manual paper, right, on the business side, where here's a receipt for X work that was done, and then the payroll clerk will be like, that looks legit, and then they'll just key it in, and then that will happen. So, and we're seeing a slew of fraud occurring in that space because of the manual nature of what's happening with banking, commercial banking.
Thank you. So just to wrap up, John, I don't know if you have a few words just to close.
Well, I think it's really important that the whole industry looks at their fraud stance, because again, there's a lot of countries going live, and if you make a country, we're only as strong as the least strong actor in Canada, and the more deterrent we put across all of the different components as we do payments modernization in Canada. There's 41 countries, as I said, going live. There's 76 countries talking about it. So if Canada can get to market with strong, you know, both central indicators for systemic risk and, you know, the different radar stations from all the participants, also in a strong position, there's a lot of other jurisdictions that they'll swing there, they'll start looking at. And so from my perspective, I think it's really critical that, we think through our stance as an industry, and we're working hard. You talk about collaboration at the front. All of the participants are working hard on fraud. There's a centralised CISO working on it with Payments Canada and the Bank of Canada and Department of Finance and others to try and work out what we should do in Canada. And I think that piece of work will assist us in deterring more holistically the whole industry of the fraudsters coming in. They're still coming, but can we deter them fast enough that they don't continue? That's going to be a key part of what I would say we all need to do as an industry.
Yep, I agree, and it's certainly that partnership from a waterfall approach, which is going to be key in order to ensure this is a success. Okay, well, I'd like to thank our panelists, and thank you for your time during this session. Thank you very much.